Breaking news, interest rates remain at 4%. Today, the Bank of England Monetary Policy Committee voted 7-2 to keep the base rate the same at 4%. Now, what does this mean for you and your property investing? Are interest rates going to fall? And why have the Bank of England left this interest rate at 4%? So my name is Simon Zucci. I've been investing in property for 30 years. I've been helping people like you become more successful investors for the last 22 years. And obviously interest rates is very important for homeowners and also property investors. We saw interest rates at a record low 0.5% for over a decade. And that was as a result of the global financial crisis, and rates came down and were very low for a long period of time. And to be honest, many homeowners and property investors got used to this very low rate. Then, in February 2022, we started to see interest rates come up as a result of the very high inflation, which was a knock-on effect from all the spending during the COVID years. Now, the Bank of England, their job is to control inflation and try and bring it down as much as possible, and they use interest rates as a macroeconomic tool to do that. So when inflation rates go up, they raise the Bank of England base rate. That slows the economy down. And when inflation comes down, they lower the Bank of England base rate to stimulate the economy and to help growth. And obviously the government needs the country to grow. They want the GDP to grow because that's going to create more income, more taxes to help solve their tax problem. So the fact that the Bank of England has left the interest rate at 4% is probably a result of they're concerned about interest rates. Now, the target for the Bank of England is just a 2% inflation rate, but inflation is much higher than that at the moment. Apparently in August, the official figure showed inflation at 3.8%, but wage inflation is 4.8% and food inflation is 5.1%. And it certainly feels that things like food is very expensive at the moment. So with this high inflation, the Bank of England obviously are reluctant to bring interest rates down because they don't want to stimulate the economy too much. They want to get inflation under control first of all, and then probably bring rates down. The Governor of the Bank of England, Andrew Bailey, has suggested they are committed to their 2% inflation target, and so any changes in interest rates will be slow and measured. Now, who knows? I think we probably will see interest rates fall more before the end of 2025, but it will absolutely depend on what happens to inflation. So what does this mean for you and your property investing? Well, many investors have been waiting. They've been sitting back waiting to see what happens with the Renters' Rights Bill, which will probably come in April 2026. They've been waiting to see what will happen with the interest rates, expecting rates to come down and maybe waiting until they buy, until rates are at a lower rate, so they have to pay less on their monthly mortgage payments. And also waiting to see what's going to happen in the next budget that Rachel Reeves is going to deliver in the end of November. So all of these factors mean there's massive uncertainty and most people are sitting back waiting. This is one of the reasons we have this buyer's market. There are more people looking to sell right now than there are looking to buy. So maybe not so good if you're looking to sell, but great if you're looking to buy. Because with not many buyers, not much competition, especially all these investors sitting back and waiting to see what happens, there's a huge opportunity for us to get out there, be bold and courageous, and pick up some fantastic deals. Now, some people are worried about a property market crash. Some other commentators on YouTube have been saying we're going to see prices come down. Personally, I don't see that happening for the fundamental reason we just don't have enough accommodation in the UK. The government have said they're going to build 300,000 new homes every year for the 5 years of their term. That's very unlikely to happen. That certainly didn't happen in the last 12 months with less than 200,000 new homes built in the UK. This means there is a massive over demand compared to supply. So generally property prices and rents will probably continue to go up. Now we're seeing a lot of landlords selling. That's a huge opportunity for us to step in and pick up some of those properties and maybe repurpose them. 92% of landlords have just one property and most of them are single let properties, which to be honest don't really work very well in the current market. But we can take a single let property, maybe repurpose it and use it for short-term accommodation, for service accommodation, or for HMOs, houses of multiple occupation, which are far higher cash generating strategies. If you're investing in property, you need to be focused on these higher income strategies. I think also people are concerned, well, what happens if the market does crash and I buy now and it's worth less in the future? Well, it doesn't matter. As long as you hold that property, you haven't lost any money. And if you can make sure you can rent it out, have good, strong cash flow, and you're holding long term, it doesn't matter about short-term dips in the market. I think it's much better to buy when the market's coming down, secure great deals, and hold long term, rather than waiting till the market goes up. Because when everybody believes the market's going up, I mean the media, the general public, and sellers, if they all think prices are going up, sellers are more inclined to hold on to get a better price in the hope that someone's going to come and pay more money for their property. So right now, when we have massive uncertainty, this is the time for you to getting out and securing great property deals as long as you know what you're doing. And I've got loads of free content and educational videos on this YouTube channel that will help you become a more successful investor. So I'd love to hear in the comments below, what do you think is going to happen to interest rates? Will they go down by the end of 2025? Do you think they'll remain the same? Or maybe they might even go up if inflation continues to creep up? Come and comment below. I'd love to hear your view. Make sure you also like the video. It helps the algorithm. Subscribe to the channel and hit the bell icon to make sure you get any timely videos as soon as they come out. Until next time, I encourage you to invest with knowledge, invest with skill.